Good morning and welcome everyone. Thank you so much for joining us today. We are so excited to have you here. Will be a great opportunity for us to learn from each other and grow. For those who don't know me, my name is Rahma and I will be your moderator for today. Let's take a moment. So Alliance Prime Accounting and Tax Consultancy is an FTA approved tax agency. Sorry again, something happened with the internet. I'm so sorry. So let's continue from where I start. Let's take a moment to introduce our company. So Alliance Prime Accounting and Tax Consultancy is an FTA approved tax agency with more than 20 years of experience. We are a leading accounting and tax firm with highly educated and skilled finance professionals, serving clients across diverse industry in different countries. Our team actually is trained by our CEO, Mr. Ali Najjar, who's an approved FTA tax agent and ex-FTA employer. Now, let's proceed with introducing today's speakers. Next slide, please. There is something with the connection, sorry for that. So Mr. Hatem Khattab is our tax director. He's an experienced tax professional with over 20 years of expertise gained with an Egyptian tax authority, leads the Alliance Prime team in providing exceptional tax services across industries, excels in as an auditor in the compliance and refund departments, served as a group tax manager for the Berries Group, and brings extensive knowledge and insights to offer leading-edge solution for complex tax matters. Secondly, Ms. Danielle Tan is our tax manager. And finally, Ms. Rovelyn Jimenez, our tax auditor. So next, please. So today's webinar will be on the importance of audit and overview of tax treatment in real estate. And the agenda will include an overview about it, as well as types of supplies in real estate, place of supply, development infrastructure, supplies between landlords and tenants, and finally, VAT refund for new residents. So actually, you will have the opportunity to submit questions by typing yours into the Q&A window, and you may send them at any time during the presentation. We will collect these and address them during the Q&A session at the end of today's webinar. Now, without further ado, we will turn the time over to Ms. Danielle, our speaker today, to highlight the compliance and efficiency in real estate. Ms. Danielle, it's all yours.
That was a quite challenging start, but thank you, Ms. Rahma, for that lovely introduction. So I hope everyone's morning is pleasant enough for you to join us today and hopefully stay. As Sherlock Holmes once said, it is my business to know what other people do not know. So before we start talking about tax compliance on real estate, first, let us talk about chaos. Has anyone ever wondered where audit and auditors came from? Allow me to tell you a story, a short one. Back in the day, dated 350 BC, imagine yourself in a marketplace where officials, traders, consumers, and even travelers gathered around you. And guess what? A marketplace where trading back in the day, made mostly through just verbal agreements. Let's have an example. See yourself in that marketplace, dealing with the goods and services verbally, selling them, and then suddenly your customer tells you that denying the agreement. Has anyone ever checked if such occurrence has happened? None. Was there a person responsible to prove such transactions has happened? None again. Henceforth, making disputes very common. Where's the proof? What did they really agree on? So through this unrelenting, chaotic marketplace, audit was created. Auditors then became the person who was responsible for confirming the responsibility on each individual. And then again, you're probably wondering, Daniel, why is it so important? Let me give you the advantages. I have created an acronym called HERE, which will give you the audits, highlighting the discrepancies, omissions, establishing accountability, aims in providing financial reports and even tax efficiency, and reassures accuracy for your stakeholders. So through that chaotic marketplace, which has created audit, the market since then needed us auditors from fields ranging from financial to taxes, which has given us a job since then, thank God. Told you short. So now moving on to our main topic, which is the real estate. In real estate, we have come across this word multiple times, whether it be social media, walking to the streets, grabbing our coffee, even through colleagues and friends. But have we really thought about or looked up what is considered to be a real estate? Let me tell you. Three bases to consider what a real estate is to have rights and interests, permanently attached on the land, and a permanent part of the land or a building structure. So now you must be thinking, then this can be any other buildings then, hospitals, hotels, and even provided services. But no, a residential building has to meet the condition that it is a primary residence or a principal place of residence of a person, a main place where a person actually resides. These can be the accommodations for students, families, orphanages even. But these accommodations of the students, but then what if, referring to the slide, which is the residential building, is not, moving on to the supplies, these would be the hotels and motels, which I have explained earlier, which will not be considered. So moving on to the first supply. What is the concept of making the first supply of a residential building 0 rated? In short terms, this will give the taxable person a chance to claim all the taxable expenses which you spend on the construction stage, following that you have followed the grace period within 3 years. Once you have made the first supply, then the subsequent one will then be subject to another tax rate, which is exempt. So now additionally, let's talk about another type of residential building, which is the farmhouses. What are these farmhouses? These are located on an agricultural land occupied as a person's principal place of residence. Take note, a primary residence, which is again subject to exempt. But let us say then, this person's house in the agricultural land was not the primary residence. It's simply a secondary home which you go to for holidays with your family. Will you consider this as a residential building? The answer will be no. It will be treated as a commercial building purely. And moving on to our commercial building, these commercial units are subject to purely 5% VAT. On each supply, as per the lease, rent, or sale, VAT will be due. The good thing about this is you can claim all the necessary expenses, taxable ones, related to this commercial supply. Moving on, mixed-use development. What could possibly be a mixed-use development? What's the difference between exempt and residential ones? Let's have an example. A brand new building within the 3 years condition. This building has commercial units such as shops, managerial offices, and it also has new residential units, which has never been occupied, and also old units, which has been occupied for many years. As per this, there will be a different tax treatment on each unit as per the law. Now, for this brand new building, will you be able to claim all the taxable expenses? Are you eligible? It's a mixed-use development, take note. In this case, you must apply the input tax apportionment. So in talking about input tax apportionment, what do we need? What are the 3 figures that we have to check? These would be common expenses. These can be DEWA, etisalat bills, internets, exempt expenses as well. And also the next one would be taxable expenses. So 3 figures: common expenses, exempt expenses, and taxable expenses. So as for these expenses, you will be taking the percentage of the taxable and exempt supplies. Then you will be applying this on the common expenses, which will determine what you will be able to claim. And moving on, to give us an overview of charitable buildings, for this sector, the first supply simply for charitable buildings will be treated under zero rated. Subsequently, though, the charitable building will then be subject to VAT at 5%, assuming that the supply is commercial purposes. And lastly, bare lands. As per the law, these are exempt. But what is considered as a bare land? A bare land must not at all cover 3 things: either partially buildings on it, partially and completed as well, I can say that, and civil engineering works as per the law. 3 things: either completed buildings, partially, and civil engineering works. Otherwise, then, it will be considered as taxable. And moving forward, I'll be handing it over now to Ms. Rovaline to continue. Thank you, guys.
Thank you, Ms. Danny. Hello, everyone. Good morning once again. Before I proceed, I am Ruby, a tax auditor from Alliance Brand, and I'll be discussing the rest of the topics for this webinar. So let's get started with the place of supply of real estate. So given that the real estate is a fixed property to the ground, any real estate located in the UAE except free zones is supplied in the UAE. So this leads me to my next point, which is the real estate within free zones. For free zones, the general rule for the VAT treatment of the supply of goods is out of scope, right? So as per FTA policy, real estate is considered a supply of goods, which means that the VAT treatment for DZ or free zone is out of scope. But if you are an owner of a warehouse in a free zone area and you have slots rented in this warehouse, it will be considered a supply of service and not goods. If it's a service, then it will be taxable at 5%. Okay, let's turn to the next slide. So for non-resident landlords, what are these landlords? So these are landlords that do not have a residency here in the UAE. So the question now is, are they required to register for VAT even if they're not living here in the UAE? The answer is yes. If the non-resident landlord makes a taxable supply and it did not meet the mandatory threshold of 375,000 or the voluntary threshold amounting to 187,500, then the non-resident landlord is required to register, charge, and account for VAT. So for non-resident landlords, the VAT registration threshold is nil, which means it's nothing. So he should be registered whatever the taxable amount is. Okay, so that's the place of supply of real estate. So what about the development infrastructure? There are many cases here in the UAE where a master developer will purchase a huge plot of land and they will divide it and sell it. So normally, the master developer will be in charge or they will add infrastructure works to the communal areas. So these developments are the roads, the power, the water, internet, and phone lines, and other connections relating to the infrastructure. So where the business makes fully taxable supplies, the VAT incurred on the infrastructure costs should therefore be recoverable in full. This means that the VAT for the development of roads, power and water connections, internet and phone lines, and others will be recoverable. So if the master developer will sell smaller plots of land as bare land, the VAT treatment will be exempt, which means that the VAT incurred for this bare land will not be recoverable. So now let's proceed with the next topic, the construction of services. So construction services that are supplied in the UAE are subject to VAT at 5%. So whether the construction is a residential or a commercial building, the 5% VAT will apply. So let me elaborate further or give you examples. If I'm a supplier of construction services or I'm a contractor, whether my customer is building a residential or commercial building, I will still charge my customer 5% of VAT. Moving on with the supplies between landlord and tenants. So there are lots of transactions between the landlord and tenants, and these transactions have different VAT treatments. So let me give you some examples. The first example is the rent-free periods. It is where the landlord provides a free month to the tenant. So for example, the rent contract is 14 months, and the tenant will be required to provide 12 months checks. With this, you have 2 months free. Since there's no consideration received for these 2 months, then it is not taxable. The second one is the lease variation. What is a lease variation? So it is when the terms of a completed lease between parties need to be amended or changed in some way. So any consideration that the landlord receives for any type of lease variation is taxable at 5%. The last example is the landlord contributions toward tenants' costs. So simple contributions to tenants' costs do not constitute a supply by the tenant to the landlord unless there is a contractual obligation for the tenant to do something in return for the contribution received. So this means that, for example, there is a simple repair that needs to be done or fixed by the landlord. If it says in the contract that there's no additional cost will be charged for the simple repairs, then it does not constitute a supply. If there's no supply, then there's no payment received. Then if there's no payment, then there will be no VAT charge. Let's proceed to our last topic, VAT refund for new residences. So this is only applicable to a UAE citizen who owns or acquires a residential property in the UAE. So he shall be entitled to make a claim to the FTA to repay the VAT on the expenses of constructing the residence. So same as in the previous topics, there are conditions when claiming for the VAT incurred. The first one, it should be made by a natural person who is a UAE national. So when you say natural person, it's not a legal or a juridical person. The second one, it must relate to a newly constructed building to be used solely as the residence of the person or the person's family. It cannot be made in connection with a building that will not be used solely as a residence. And lastly, the refund claim must be filed or submitted with the FTA within 12 months from the date of completion of the newly built residence. If it is beyond 12 months, then the refund or the VAT incurred cannot be recovered. So aside from recovering the construction cost of the residence, some costs relating to the residence are also recoverable, which will be presented in the next slide. So the first one is services provided by the contractors. This includes the service of the builders, the architects, the engineers. So this, for example of this, is the exterior and interior design of the building. Second example is the building materials. It is normally incorporated by builders. And this would be eligible for a refund. This includes central AC, the fire alarms, the windows, kitchen sinks, window frames, wiring embedded inside the structure of the building. So this does not include appliances, furniture, and landscaping. So we have to remember that this can only be claimed within 12 months of the completion date of the residence. So this is the end of the topics for real estate. I hope you have learned a lot, and now I'm going to hand it over back to Ms. Rock. Thank you.
Thank you, Ms. Ruby. As we said, we are now going to begin answering the questions submitted during today's presentation, and Mr. Hatem will answer on them. So as a reminder, you can still submit your questions through the Q&A window. Mr. Hatem?
Good morning, everyone. Thank you, Ms. Rahma. Many thanks for my colleagues Ms. Daniel and Ms. Roveline. Thank you for your valuable presentation, and it's our pleasure to answer all your questions. Let's start with the first question, please.
So, Mr. Hattem, our first question is mentioned, what if I sold before 2018, but the invoice in 2019?
Actually, as per law, if the supply done in 2017 and the payment is done, so I believe there is no VAT will be applicable. But as per law, there is 3 conditions to apply VAT, or 3 points to specify what is the tax point. If you receive the payment, or if you done with the supply, or if you issue the tax invoice. In case of issuing tax invoice in 2018, it will be taxable. So it's better to finish all this as provide the supply, hand over the building fully, and receive the payment, and make the tax invoice in 2017. By this way, nothing will be related to VAT. Next question, please.
So the second question is, my construction contract starts in 2017, but it ended in 2019. How?
As per law, the Article 80 is the transitional period. First, we have to look to the agreement or to the contract between the 2 sides. If it's it should be mentioned the VAT when it will be applicable, it will be on which side. So who will take this VAT? The supplier, the contractor, or the landlord, or the developer. But let's say it's not mentioned. So what paid already in 2017, it will be out of scope of VAT. The rest of the payment, all the payment will come after 1st of January 2018. It will be eligible for VAT. It means 5% will be applied. If it's mentioned clearly in the contract, so we have to add 5%. If it's not mentioned clearly in the contract, so the payment will be considered as an inclusive of VAT. Next question, please.
What do you mean of input tax apportionments?
Input tax apportionment. It's as per law. If the supply itself, it will be subject to VAT, so I can claim all the taxable expenses or all the taxable I paid before. If the supply will be exempt of VAT, it means I cannot claim any taxable expenses. In the case of real estate, we might have a building including all. Some taxable supplies, it's like 0%, or like the commercial unit, which will be charged with 5%. Also, I will have the residential unit, which is exempt of VAT. There is no VAT. So for the total or for the common expenses, what is eligible to be claimed and what I cannot claim? In this case, I have to make a percentage between the direct expenses. What I mean by direct expenses, let's say, for example, the maintenance contracts for the commercial units, like shops, like managerial offices, all these. So it's very easy to specify how much the direct expenses I spent for this unit. Also, I will apply the same for the exempt unit. How much I spent as a maintenance or as a direct expense for the residential unit. After making a comparison between these 2 amounts, so I will get a percentage. How much, let's say, for example, it will be 40% for the commercial unit and 60% for residential unit. It means my taxable expenses is 40% from my total expense. I will apply the same percentage on the common expenses. It means I am allowed to claim only 40% from my common expenses. The rest will not be claimed. Next question, please.
So what if I take commission only? Should I register for that?
In this case, yes, this commission, it will be against provided service. So it's subject to VAT. Once the total of my commission will exceed 375, then I will be required to register mandatory. But also I can register voluntary registration if my total revenue of the commission reach 187,500. Next question, please.
I don't live in UAE, but I sold properties. Should I charge VAT?
It depends which kind of property. So if this property is a commercial property and the revenue will exceed 375, yes, you are required to be registered in the VAT. If it's commercial unit, totally commercial unit, so in this case, it's exempt. You are not required to be registered on VAT. Next question, please.
What if I sell a commercial land which can be used for parking purpose later on?
Here we have to look to the consideration. It will be considered as a service you are providing for parking because there is a consideration. It's not for free. Sure, you will charge anyone will park in this land for money. So yes, it will be considered as a taxable revenue. And again, if your revenue will reach the registration threshold, you have to register for VAT. Next question, please.
So if I use the property for 1 year as a residential and then let it out, will I be denied my VAT refund?
It's not very clear question, but I will assume that if you are using this one for rent and it's commercial unit, it's residential unit, then it's not subject to VAT. Also, if you are talking about sales, so also it's still, as per the unit, it's still residential unit. So if you will sell or you will rent it as a residential unit, so it's out of the scope of VAT. You are not registered to be, you are not required to be registered.
Next question. Okay. A non-resident owner buys an office in a free zone, 1.5 million dirham, which is rented. Do you have to register with that?
As we mentioned in our presentation, for non-residents, the threshold is nil. It means whatever your business, and you are non-residents, whatever your business, in UAE, you have to be registered.
Okay.
Question, please.
So properties are registered in their owner name and properties are managed by LLC, and tax invoices are issued and submit the return from the company. I'm not sure if this is a question or just.
Okay. First, we have to check what is the relation between the owner and this property management. If there is a legal obligation, if there is a contractual obligation between both of them, then it's two supplies, not only one. The first supply is from the property management to the tenant, which will be taxable. And second, we can consider this company as a property management is providing a service to the owner. So yes, this company has to charge all the tenants with 5% for these services if it's commercial, and the company itself will charge the owner for the provided services with 5%. Next question, please.
What are the VAT implications if I lease or rent out my land property to tenants?
My land property. Again, as we explained, if we have to check this point. If this land is completely bare land or it's not bare land. As per law, if it's just fenced or if I made a gate or something like this, it will not be considered as a bare land. In this case, it will be subject to VAT. But if it's completely bare land, there is nothing on this land, so it will be exempt. Next question, please.
We are constructing a new residential commercial building after demolition. Can we claim input VAT on constructions?
As a constructing company, yes, it's a business, so all my taxable expenses, it will be claimed. Next question, please.
Telephone, rent, office expenses, etc., can be considered as a common expenses and can claim input VAT percentage.
Let's say this property, it's a company running this business. So for me, I will consider in this case, the revenue for this company, it's a mixed revenue between commercial unit, because there is a revenue coming from commercial units. There is other revenue coming from residential units, which is exempt. So in this case, I cannot claim all 100%. I have to follow the input tax apportionment. Next question, please.
So how are VAT obligations different from commercial properties compared to residential properties in UAE?
It depends on how we will specify the revenue. If the revenue of my business, it will be commercial or subject to VAT, then I am eligible to claim my taxable expenses. If my revenue will be exempt from VAT or from tax, in this case, I am not eligible to claim any taxable expenses. It will be considered as expenses only. It should not impact the VAT ledger.
Great.
Next question,
So,
please.
if we buy a residential building, then what will be a VAT treatment?
If it's fully residential building, no, it's exempt of VAT. No VAT will be charged on the consideration of supply. Next question, please.
Do I have to pay VAT if I cut my tenancy contract short?
Again, please.
Do I have to pay VAT if I cut, or let's say cancel, my tenancy contract short?
Again, I have to consider many things. For example, if this unit, the contract for this unit, is it residential or is it commercial unit? This is first. Second, how will be the financial treatment with the landlord? So it will be just finished like this, or it will be compensation will be paid. This compensation will be against loss, the loss I caused to the landlord, or it's because of damage or everything. So we have considered all these things because it will be different tax treatment. Next question, please.
Are there any time limits for claiming VAT refunds on land property transactions in the UAE?
The only condition is for the UAE national persons who will claim for their own houses. The time frame is 12 months. But generally, in law, for any taxable expenses, I have to claim all my taxable expenses within the same period. The only exception is if I missed for some reason, I can claim on the next period. Next question, please.
If we buy a property under owner name and can claim input VAT under company which is owned by owner,
we have to check the title deed. The title deed, it's under the company name or the owner name, because it will be different legal entities, if an individual person or a legal company. In this case, as per my understanding, no, you are not eligible to claim this VAT, because as per the law conditions, the tax invoice should be addressed to the same person who will pay these expenses, then you will be eligible to claim. If it's under different names, no, you don't have the right to claim. Next question, please.
I am a foreign investor purchasing land in UAE. How does VAT apply to my transaction?
We have to consider if it's bare land or if there is any civil work on this land. If it's bare land, there is no VAT. Next question, please.
Okay, what are the required documents for non-residents as a landlord to register for VAT?
same requirement. It's IDs, UAE ID, that's passport, declaration for revenues. If there is a trade license, if individual person, no need for the trade license, bank account, and same requirement for any registration. Next question, please.
So would I record rent of commercial property from non-registered landlord as a zero rated or exempt?
Not clear question. Again, please.
Would I record rent of commercial property from non-registered landlord as a zero rated or exempt?
If non-registered landlord, then he will not be eligible to charge you with VAT, if I understood the question properly. So if individual person non-registered, he doesn't have the right to charge you VAT. In this case, no VAT will be paid, nothing to be recorded. But if it's a company, registered company, they will have the right to charge me with VAT. In this case, whatever the VAT I will pay, in order to claim, yes, I have to record and keep all records and documents. Next question, please.
So how to treat the security deposit and the repayment treatment?
To consider any supply, a taxable supply, should be a consideration against this supply. At the time I am paying this security deposit, it's just a security. There is no services provided against this security. So there is two methodologies to record this security deposit. The first one is to record it as a taxable revenue and issue tax invoice to your tenant. In case you will refund back all this money, you have to credit it by credit note. This is the first way to record it. Second, you will record it without any tax, but in the case you will refund this amount partly, the consideration which you will deduct against some services, some maintenance, some damages, then it should be recorded as a taxable and you will have to issue a tax invoice. Next question, please.
If anyone have own real estate, need to register for VAT?
Depending if this real estate will be included commercial unit and commercial supply, or it's only residential. In case of residential, no need, because it will be it will be exempt supply. No need to be registered.
Okay, great. Actually, Mr. Hatem, this is our last question on the in the Q&A window. So anyone have a question, they can type. Yes.
It's always a pleasure to help and serve and to answer all your questions. And thank you for joining us today. And now I will leave you with Ms.
Mr. Hatem, there is 2 more questions. There is 2 more.
Yes, please.
So, all right, here the first question is, this is outside topic in your discussion, but if you could clear this question, if company A in a free zone purchases from outside UAE to sell outside UAE, will RCM be applicable?
If the company is purchasing from outside UAE and it will resell outside UAE, so this goods or these goods didn't touch UAE land. In this case, there is no RCM, and the all transaction will be considered as out of scope. Last question, please. Would you unmute, please?
My bad, Mr. Hatem. So, free zone companies eligible for registration? This is the question.
Sorry, again?
Free zone companies eligible for registration or not? I mean, like that's what he needs.
It's a very common mistake now in the market, and I don't know why all the companies in free zone consider themselves out of scope, or they don't have to register. To make it simple and clear, any company within the free zone, if they are providing goods, so it's out of scope, still out of scope. If all the transaction will be within the free zone or itself, or from free zone to free zone, or from free zone to outside UAE. But if the company existing in free zone and they are providing services, so all and every kind of services within the free zone is taxable and under the scope of VAT. So it's depending on the business, depending if there will be supplies to the local market or all the supplies will be within the free zone or outside UAE. Thank you everyone for joining us today, and I will hand it over again to Ms. Rahma. Ms. Rahma, please.
Thank you, Mr. Hatem, and thank you everyone for attending today's webinar. If you have any other questions and or a feedback, please reach us out on info@alliance/acc.com. Please, as with our upcoming webinar, which will cover the corporate tax. And now, on behalf of Alliance Prime Accounting and Tax Consultancy and our speakers, thank you once again for joining us today, and have a great rest of your day.